Morning, this is Chake. In this morning's lesson, we're going to be doing asset disposal. So we're quickly going to go through our questions and just see what we are required to do. Now we are doing activity 6 here. Here they're saying that the following information was extracted from the books of Demi Traders. Their financial year ends on 29 February 2020. So which means it started on the 1st of March 2019. Okay. Number one, we are supposed to calculate depreciation for vehicles. Number two, we show the asset disposal account. We also show the tangible asset note, and as well as providing a suitable reason for why an asset will be sold. Okay, so so this is the information that we have. So according to our information, they are saying that these are the balances that we had on 28 February 2019. Remember, our year starts on the 1st of March 2019. So the following day after 28 February 2019, it will be 1 March. So this simply means that these are our opening balances. These are our balances at the beginning of the year, unless they tell us otherwise. So let's check. The first thing here, they are saying that we must calculate the depreciation for vehicles and equipment. So we'll need to read the information on the adjustments to get an idea of what is happening, so that we can know whether some information has been recorded or not. Okay. Now, here they're saying that number one, for land and buildings, they're saying that on 1 July 2019, extensions of 200,000 were completed to the office building. A further 10,000 was spent to repair a leaking roof in the storeroom. An amount of 210,000 has been transferred electronically to Rapid Builders. The amounts have been debited to the repairs account. So now here the problem is that, remember, whenever you're doing an extension as part of the additions, but the repairs cannot be recorded as part of your additions. So we need to only record the 200,000 part on addition. So if we're doing our income statement, will need to also correct the repairs and just take out the 200,000, so that we can be left with only 10,000. So this is how you are going to do this to show that there was an extension. So remember, according to this, they showed you that in the beginning of the year, the cost of your land and buildings, it was 1 million, right? So which means that your carrying value and the cost will be the same. It will be 1 million. Your accumulated, remember here it will be attached, because land and buildings doesn't depreciate in the curriculum. And then under additions, you are going to have that 200,000 for the extension. Okay. And then under disposals would have nothing, because we did not sell anything. Under depreciation, remember, it will be attached, because the land and buildings in our curriculum doesn't depreciate. Okay. Now at the end of the year, the accumulated depreciation will be nothing. So which means that our carrying value will still be 1,200,000. So this part, we are done with it. And then after that, the next part, this is what they want you to show. They are saying that a vehicle costing 180,000 was bought on 30 April 2019. So remember, this is your new vehicle, right? So you need to check. Remember, you have been asked to calculate depreciation. Okay, so you must be careful about that. And then next, they are also telling us about an equipment that was sold. So remember, next they're saying that on 1 September 2019, equipment which was bought on 30 November 2017 with an original cost price of 40,000 was traded in at a profit of 3.4 against the new equipment bought on credit for 90,000. The transaction has not been entered in the accounting records of the business. Okay, so now here let's deal with the part where we are calculating depreciation for the old one and the new vehicle. Let's start with that first. So remember, our year starts on the 1st of March 2019, ends in 28 February 2020. So that's what we need to keep in mind. So according to this, our vehicles, the old ones, costed 600,000, and then they are depreciated at 15% per annum on the cost price. So when we calculate the depreciation for that, we are going to say, for the old vehicles, we are going to say 600,000 multiply by 15 divided by 100 and then also multiply by 12 out of 12, and then we will see how much we are getting. So when you say 600,000 multiplied by 15 divided by 100 multiplied by 12 divided by 12, it gives you 90,000. So it gives you 90,000. But when you look at your information, your accumulated depreciation according to the fixed asset node at the beginning is already 570,000. So which becomes a red flag for us. So it's already the accumulated depreciation is 570. So if you say 570,000 plus this 90,000 is going to give you 660,000. So when you say plus 90,000, it's going to give you 660,000, which cannot happen. Your depreciation cannot, when you add it to your accumulated, they cannot exceed the cost price. So therefore, which means when you calculate your depreciation for the old asset, you are going to check what was your carrying value, and remember the carrying value was given to you in the fixed asset node. So the good news is that that carrying value was given. So you are just going to take your 30,000 and you minus 1 rand. Remember, there were no vehicles that were sold. Okay, so you are going to take that 30,000 of the carrying value and you subtract 1 rand. Then that will be your depreciation for the year for the old vehicle. Okay, so you take your 30,000 of the carrying value, you minus your 1 rand, is going to give you 29,999. So this is the highest depreciation you can get for that old for those old vehicles. And then number two, you need to calculate depreciation for the new one. So remember, the new one, according to the information, was bought on 30 April. So meaning it was with us from April 30 April 2019. So it was with us from for May, June, July, August, September, October, November, December, January, February. So it was with us for only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it was with us for only for from remember 30 April is the end of the month, so we'll start from May. So it will be May, June, July, August, September, October, November, December, January, February. So that will be a period of 12 months. So when we calculate, we're going to say for the new one, we're going to say 180,000 multiplied by 15 over 100, and then multiply by 12 over 12, by 10 over 12, not 12 over 12. So remember, it's going to be 10 over 12. Let's see how much we get. So 180,000 multiplied by 15 divided by 100, and then multiply by 10 divided by 12. It is giving us 22,500. So therefore, our total depreciation for the year for this will be 29,999 plus 22,500. So let's see how much we're getting. So we are going to say 29,999 plus 22,500. So the depreciation for our vehicles is 52,499. So because we have already calculated it, we can take it straight to our we can already take it straight to our fixed asset. So it's 52,499. Okay, and then remember, we don't have any disposal at carrying value, so it will be 0 here. Now when you check the cost price at the end, it will be 600,000 plus 180,000, which will give us 780,000 at the end. And then our total accumulated depreciation here, because we did not dispose anything, it will be 52,499, and then plus 570,000, so which will give us 622,000. It will give us 622,499, and then our carrying value on this, it will be 780,000 minus our answer. It will give us 157,501. 501. Very important for you uh, to know how to calculate this. If you want to confirm your carrying value, you can simply just make sure that you do it like this. But I'm not saying that you should do it like that in the exam. Just take your, remember, if you check on the movement section, the bigger sign is the one that is positive. So if you say 180,000 and then you minus 52,599, it gives you 127,501. So you'd have your 127,501. So your carrying value is 30,000. So if you say this answer plus 30,000, it will give you 157,501. So which says that our calculation is correct. Okay. And then after this, then you can go to the information about the equipment. So in this one, you need to be very careful. Remember, you need to check did they sell or not. Okay. So now let's go to our equipment and check what is happening. So in our equipment, this is what they are telling us. They are telling us that on 1 September 2019, equipment which was bought on 30 November 2017 with an original cost price of 40,000. So remember, the original cost price of this equipment was bought on the it was bought on 30 November 2017. So at the moment, we don't know what was the depreciation of this equipment at the date of sale. Okay, and then which means you need to start calculating it from the time it was bought. Okay, so we need to check when was it bought. We need to go back to the financial year for 2017, and then they're saying that it was bought with an original cost price of 40,000 and it was traded in at a profit of 3.4. But we also know that they bought a new one for 90,000, and then the transaction they're saying they have not been recorded in the books of the business, and then the equipment is depreciated using diminishing balance method. So this is how we are going to start with the depreciation for that equipment. Remember, we need to trace it, so I'm going to do the calculation here for the previous years. Okay, so we are going to look at that old equipment, that sold equipment. So remember, they said it was, but the cost price was 40. I think the cost price was, let me just check. They said the cost price, the original cost price was 40,000. So that information we will need to show it. So the original cost price was 40,000, and then remember here, they depreciate using diminishing balance method for 20%. So say multiply by 20%. So in the first year, remember, for the year that ended, the first year will be the year that starts on the 1st of March 2017 to 28th February 2018. So in that year, that equipment was with us for only remember, it was bought in November, right? According to the information, it was bought on the 30th of November. So meaning it was with us for only December, January, February. So it was with us for December, January, February, because it was bought the end of November. So for the first year, the depreciation on that asset was only calculated on it was calculated for 3 months. So it will be 40,000 multiplied by 20 over 100 multiplied by 3 over 12. Okay, so 40,000 multiplied by 20 divided by 100 and then multiply by 3 divided by 12 is going to give us 2,000. So the um accumulated was 2,000. So maybe for this, what would normally help, it will be when you do the fixed asset register, but I'm going to lose time. So remember, we can just try to show it. This will be our fixed asset register. Remember, it must include the cost price of the asset. It must include the cost price, but because I don't have enough space, I'll just explain how to do it. So remember, our cost price, according to here, the cost price of this asset, maybe let's have the cost price here. So our cost price will be 40,000. In this case, it will be 40,000. Remember, this is our cost price, and then we will then have the date. Okay, and then would have our depreciation, our accumulated depreciation, and then would have our carrying value. So during the first year, for the year that ended 28 February 2018, the depreciation was this 2000, and then so which means the accumulated was also this 2000, and then our carrying value was 38,000 in this case. And then for the year that ended 28 February 2019, remember it will start on the 1st of March and then end in 28 February 2019. Okay, so the depreciation will be calculated on that, the carrying value. So we'll take 38,000 multiplied by 20 divide by remember in that 20 divided by 100 multiply by 12 divide by 12. So in that year this equipment was with us for the entire year, so it will be 7.6. Okay, now so it will be 7.6. Okay, so when we calculate the depreciation, remember it's 7.6, so 2000 plus 7.6, let me just check something. 38,000 multiplied by 20 divided by 100, 12 over 12 is 1. So yeah, our answer is 7.6. So that's what you need to check. So the answer here is 7.6. So 7.6 plus 2000, it will give us 9.6. Okay, so which means the accumulated depreciation when we started would say 40,000 minus 9.6. It's going to give us 30,400. Now let me show you what will happen. Let's check when did we sell it. And like I said, this asset register is very important, guys. You need to make sure that you answer it. So let's check when was it sold. So according to this, when we calculate that depreciation of the sold asset, remember it has already, we know what is the carrying value, so that calculation in the answer book for the current year we must show it. Okay, so remember when we calculate the one that was sold, we are going to look at the cost price. So our cost price according to our information, remember you must show them how you code the carrying value. So would say we'll show them that part whereby we are saying but I advise that you make sure that you show your answer somewhere. So we say 40,000 minus that we say 40,000 minus remember we are coming here 40,000 minus 9.6, 40,000 minus 9.6, which will give you 30,400. So you calculate your depreciation on 30,400. So you say your depreciation is equals to 30,400 multiplied by 20 over 100, and then you say multiply by, remember we need to check for the current year when was it sold. According to the information they said it was sold on the 1st of September. So on the 1st of September 2019. So in the present financial year it was with us from March, April, May, June, July, August. We can't count September because it's the end of the year, so we'll multiply it by 6 over 12. Okay, and then this will be the depreciation that we get. So 30,400 multiplied by 20 divided by 100 and then multiply by 6 divided by 12, it is giving us 3,040. Okay, then this 3,040 is your when you go to your note is your depreciation for the year. Remember this year ends, it will be when they sell it on they sold it on the 30th of, we can just write the 30th of August because they sold it on the 1st of September. So or you can just write the same day, but remember that you won't depreciate for that one day. So you'd have for 1 September 2019 your depreciation is 3,040. So 9.6 plus 3,040, it is giving us 12,640. So the accumulated, the carrying value in this case, if you say 40,000 minus 12,640, it is going to give you 27,360. So this is how much they were supposed to sell the car for. So under that disposal of fixed assets, disposal on the disposal at carrying value, we are going to write that amount. Remember, it's going to be the amount according to our calculation is 27,360. So that 27,360 will come here. But then also remember that there's a new one that was bought. So the new one that was bought, for that depreciation, for the new one that was bought, it was bought on uh the new one was bought on, I think, on the 1st of September. So that's what we also need to keep in mind. Okay, because they said there was a trade in that took place. So the new one, the new equipment, it was bought on credit for 90,000. So which means that we are going to have 90,000. I'll show you how to record it. So it means that we are going to have 90,000 on the addition at cost. So we'll have at the end, at the addition at cost, would have 90,000 here. So the cost, for us to determine the cost price at the end, we are going to say, remember here they didn't give you the cost price of equipment at the beginning, but let's check what did they say with regards to our information. So now on our information equipment, they gave us 320,000. Remember they said the part where they bought and sold was not entered in the records of the business, right? The part where they bought and sold was not recorded in the parts of the business, in the records of the business. So it means that this 320,000 is your equipment at cost. So we'd have our 320,000 here, because to get the difference you can just see that here they gave you, you can just check, try to use what you have here. If you say 600,000, let me show you how you, if you add accumulated and your accumulated and your accumulated and your cost price, I mean your accumulated and your carrying value, 570,000. Let me show you, 570,000 plus your 30,000, it will give you 600,000. So it means we can do the same here. So 255,000 plus 65,000 will give us that 320. So our cost at the beginning was 320,000. So remember here what happened at the end of the year, our total cost will be that we had 320,000 in terms of equipment. We sold the one that was costing 40,000, and then we added a new one for 90,000. So it means that the cost at the end will be as follows. So 320,000 minus 40,000 and then plus 90,000 will give us 370. So the cost price at the end of the year will be 370,000. Okay, and then in terms of our accumulated, we will need to be very careful. So that let's calculate the depreciation for the new one. Remember the new one was bought for 90,000. So the new one is going to be 90,000 multiplied by we're going to say multiply by 20 over 100, and then multiply by, because the new one was bought in September, it will be for September, September, October, November, December, January, February. So it will be with us for only 12 months. So let's see how much we're getting. So 90,000 multiply by 20, divide by 100, and then multiply by 6, divide by 12. It is giving us 9,000. So the new one has got a depreciation for 9,000. Now let's look at the old ones. With the old ones, you must be very careful. So remember, the cost price for the old ones is 320,000. So if you subtract, you need to subtract the one that was bought, which is 40,000. So let's see how much we're going to get. So if you say 320,000 minus 40,000, it tells us that we are left with 280,000. And then we must do the same also with regards to our we must do the same with regards to our accumulated depreciation. We must subtract the accumulated of the sold asset. So according to our information, our accumulated at the beginning on equipment, it is 65,000. So in this 65,000, we must take that 65,000 and then we must subtract the accumulated on depreciation of that old asset. Remember, it had an accumulated depreciation of 9.6 at the beginning of the one that we sold, so we must subtract that 9.6. Okay, so we'll say minus 9,600, and then it will tell us, so 65,000 minus 9.6, it is giving us 55,400. So we have our 55,400 there. So therefore our depreciation will be, remember our carrying value, we need to get the carrying value here. So our carrying value in this case, it will be this one minus this one. So if you say 280,000 and then you say minus 55,400, it shows you that our carrying value is going to be 224,600. So remember, you are going to calculate it on this. So say 224,600 multiply by 20 over 100, and then multiply by 12 over 12. Okay, so let's see, this one multiply by 20 divided by 100, multiply by 12 divided by 12. Remember, the old ones were with us for the rest of the year, so it is giving you 44,920. So this is the depreciation of the old one. Okay, so our total depreciation for the year, guys, is going to be this one here, plus this one, and then this one. So which means our depreciation for the year is going to be, we're going to say 44,920 plus 3,040, and then we also say plus 9,000. It will give us the depreciation for the year. So let's see, 44,920 plus 3,040, and then also plus 9,000. It gives us 56,960. So our depreciation for the year is 56,960. So I'm going to write it here, under here, that our depreciation for the year is 56,960. 56,960. So to get our, for us to get our accumulated at the end, remember when we started, our accumulated depreciation was 65,000. So we'd say 65,000 plus depreciation for the year of 56,960. 56,960. Then we are going to minus the total accumulated depreciation of the asset that we are selling, which is 12,640. So we're going to say that minus 12,640, because this asset is no longer with us. So say 65,000 plus 56,960, and then we say minus 12,640, which will give us 109,320. So our accumulated at the end is 109,320. So when we want to get the carrying value, we'll say 370,000 minus that answer that we got, which will give us 260,000 260,680. And then from there, what we need to make sure that we do, we need to also check in terms of our asset disposal. So remember, the disposal took place on the on September 2019. So we would say, remember, when you sell an asset, in terms of the asset you are debiting, you will debit your, remember, they sold equipment, so you'll debit your asset disposal, you'll debit asset disposal, and then you credit your equipment. Okay, so which means that what we are going to do, because asset disposal, the equipment gets credited, in this case we are going to debit asset disposal by the cost price. So say 2019 September the 1st, then would have our equipment. Okay, and then general, and then would have the cost price of that equipment as 40,000. And then in this case, because when we sell, we credit, we debit accumulated depreciation, it means that the journal entry will be that we debit um uh accumulated depreciation, and then we credit asset disposal. Okay, very important for you to know this. So remember, we are going to come here and say 2019 September. So we are going to record on the credit side. Remember, 29 September the 1st, then would have accumulated depreciation. But remember, it's going to be for the total accumulated of the sold asset, and according to this, the total accumulated is 12,640. So we'd have that 12,640 here. And then remember, they said it was sold at a profit. According to information, it was sold at a profit of 3.4, right? So remember, when we record profit, we say debit credit. So we are crediting profit on sale of asset, right? And then we are debiting asset disposal. So by all of this, by 3.4, so it means we must come on the debit side of asset disposal and say we are going to say 2019 September the 1st, then we'll have profit on sale of asset, general, and then amount is going to be, according to our information, our amount is 3.4. So we're going to write that 3.4 here, and then it will tell us how much did they get rid of that asset. Okay, so we are seeing that here, remember they said it was traded in. So when we trade in, we write creditors control, and then general. So the total for this is going to be 43,400, and then also 43,400. So let's see what was the trading value. So 43,400 minus 12,640, it gives us 30,760. 30,760. Let's see what was the carrying value. Remember, we need to look at the selling price and the carrying value. So according to this, our carrying value on our information, the carrying value was 27,360. So as I was trying to highlight there, the carrying value was 27,360. So it means if you say 27,360 plus 3.4, it means that they sold it for 30,760. So that your profit is 3.4. Okay, so this is how we will record it. I hope you guys have understood. The last question they are asking us, that why would we sell, why possible reasons for selling, for an equipment is being sold. We can say it is because it is no longer useful for the company. Okay, and then we can also say maybe it is costly to repair. Okay, guys. If you want me to become your online tutor, you're more than welcome to get in touch with me by using the details that are available in the description of this video. Thank you so much for watching. May God richly bless you. Remember that our lessons start from just 500. If you want us to tutor you, get in touch with us by using those details. Thank you so much. God bless you. Shalom.